I mean, what if he just paid himself a bigger salary? His salary is a fraction of mine. He only makes $100,000 a year. That's all he pays himself. Why does he do that? Because he doesn't want to pay the taxes. But he's paying it through Berkshire Hathaway. So he said, look, I'm not paying any taxes. He's paying it. And it's a lie to go on television and say, I pay 17%. He's not telling anybody about the 35% that he pays through Berkshire Hathaway. And apparently, too, he's got a big thing going with the IRS because he's thinking he's paying too much. He's trying to get his taxes reduced. You know, at the same time, he's claiming he wants to pay more. Well, why isn't he just paying more? But everybody thinks that the rich are paying no taxes. Meanwhile, he's paying billions in taxes, and a lot of rich people are paying a lot of money in taxes. And that's a problem, because if they weren't paying all that in taxes, what would they be doing with the money? They might be creating some jobs. They might be investing in growing their own businesses, or they might be investing in growing other people's businesses. They might be, even if you just put your money in the bank, it just doesn't sit there. They don't dig a hole in the ground. The money gets loaned out. What's his name? Who's just coming out of the closet now. He's a member of the 1% too, but Michael Moore. He's been going to Occupy Wall Street like he's one of the 99%. Hey, always talking about the 1% is the 1%. And when somebody confronted him, wait a minute, Michael, aren't you part of the 1%? Oh, that's not possible. How can I be in the 1%? Well, because you got millions. That's why the 1%. But after he finally admitted that he had millions, I think his net worth is something like $50 million. But after he admitted, he said, well, yeah, okay, I make a lot of money. He said, but I'm not like those other rich people. I don't try to make money off my money. He said, I took it to the bank and I said, just put it in the lowest interest rate account you got. So in other words, he doesn't want to be part of growing the economy. So those other rich people that help companies start off, venture capitalists, people that provide the seed capital for companies, people that make business loans, they're no good. It's better if you just take your money and just bury it in a hole, and that means you're a good citizen. And in fact, he even said that when he got his money, when he got his first check, he sold Roger and Mead. He got $3 million. He said he went to an accountant. I'm not making this up. He said, I went down to an accountant. I told him, I want to pay the most tax possible. Don't take any deductions. I want to pay my fair share. I mean, nobody goes to an accountant and say, I want to pay. If you want to, what do you need an accountant for? Just send it in yourself. You need an accountant. Here's my money. Here's the tax bracket. Here's the check. You don't go to an accountant not to find deductions. So, And when I was down at the park, people were saying, one guy actually came up to me, and he said, imagine if a guy makes $100 million a year. He said, what if he only made $50 million? Imagine all the extra jobs that we could create if he made less money. Well, didn't he think about how many jobs were created to make $100 million? You think it just falls out of the trees? I mean, if you make $100 million, other than some people on Wall Street, which is a problem because of the Fed and the cheap money, and I don't disagree that there are some people who make $100 million and create absolutely nothing. That has to end. But that's from the Fed. If the Fed let interest rates go up, that wouldn't be happening. We'd actually be getting real investment. But if somebody makes $100 million in the real world, not on Wall Street, but actually on Main Street, they're not going to do that without creating a lot of jobs. But more important than the jobs, if you made $100 million, you must have come up with something that somebody liked. You must have had a good product. You must have provided a service that a lot of people wanted. I mean, the way you get rich in the free market is to try to figure out what the average person wants and then give it to them. So if you made a lot of money, that's doing their fair share. Somehow the impression is the only way you do your fair share is if you pay taxes. As if, just going out there and starting a business and employing people or creating products, none of that counts. I had an argument with one guy, and I tried to tell him that businesses create jobs. And he said to me, no, they don't. Businesses don't create jobs. He said, consumers create jobs by spending. I said, well, where do they get the money to spend? He said, for their jobs. Well, there you prove my point. And I said, and where do they get the stuff to buy? You know, even if they had money, if there's nothing to buy, you need production to have consumption, and you need jobs to have income. You know, and the people, when somebody was saying, well, you know, it's the only reason you're successful is because of the taxes that are paid, because the government provides the roads and the schools. So yeah, but where's the government getting the money to build the roads and to run the schools? The businesses had to produce the income that could be taxed. That's what came first. It wasn't that the government came first, and then because we had this big government, that we had all these successful businesses. It was because we had entrepreneurs that were successful, that generated taxable income, that the governments were able to provide roads or provide the schools or all that. But they have it all backwards. And this is all, a lot of this is because of the bad rap that capitalism now has because of the label. I mean, I often say that China is giving communism a good name. And we give capitalism a bad name. And I knew this was going to happen too when I was writing the book. I knew exactly where the blame was going to go, and I was worried about that. But anyway, so where are we now, right, in this crisis? Because we had the financial crisis, we have the bursting of the real estate bubble. What's next? You know, what is going to bring on the real crisis? Well, it's going to be exactly the same as what I was saying back then. I knew that the monetary policies that we were going to pursue were going to crash the dollar and ultimately send interest rates through the roof. Now that hasn't happened yet. I mean, the dollar's been going down. Gold is up another $40 today. When I wrote Crash Proof, gold was $600. It's now $1,800, so it's tripled. I knew gold would go up. I knew the dollar would go down. The dollar's made record lows since I wrote that book. The dollar's hit record lows against a number of currencies. Now, the dollar had a little bit of a head fake rally in 2008 that got people to, to kind of doubt my thesis, but it didn't take long for that rally to fade. But the dollar hasn't collapsed yet. Where are we? What's going to happen? Well, if you look, what's going on in Europe. I mean, you hear the stories about Greece every day. What's going on with Greece? What's the problem there? Well, they borrowed a lot of money that they can't pay back. Well, that was the case 2 years ago, but there wasn't a problem. Nobody was worried. The debt was just as big, but nobody cared, so it wasn't a problem. But then all of a sudden, somebody was like thinking about it. You think the Greeks can pay us back? Well, they borrowed an awful lot of money. And some, yeah, you know what? I don't know. Maybe they can. Maybe they're not good for it. I mean, no one's really got a job. So all of a sudden, people don't want to buy their bonds anymore. And interest rates were like this for years, and then all of a sudden they went like that. And then it's a crisis because now the government can't afford to pay the debt. So you got this sovereign debt crisis. It's not just Greece. Ireland had a problem. You've also got concerns about Italy and Spain, but we did the same thing. I mean, we did the same thing as Greece. I mean, we borrowed a lot of money. We can't pay it back either. But right now, no one seems to care because interest rates are still really, really low. We owe $15 trillion, yet the interest rate on that $15 trillion is, negligible. It's practically zero. I think 40% of the national debt is due in the next 12 months. Now, what's 40% of 15 trillion? It's about $4 trillion. Can we pay back $4 trillion in the next year if our creditors don't want to roll it over? Of course not. The government only collects about $2.2 trillion in taxes. So we're obligated to repay $4 trillion of debt in the next year. That's like twice what the government's going to collect in taxes. How can we possibly do that? Well, obviously we can't. So what are we counting on? We're counting on the fact that we can borrow the money from somebody else. Well, who else was counting on that kind of dynamic? Right? Bernie Madoff. And it worked for a while, it worked for a long time, but doesn't work forever. And when they interviewed Bernie Madoff in prison, they said, well, what was your plan there? He was like, well, I was just hoping for a miracle. That's our plan. And it didn't work for Bernie. But right now, people are willing to roll over the debt because they think we're good for it. Well, how can we possibly be good for it? I mean, do you think the people that are protesting in those tents in Zuccotti Park, you think they got their share of the $15 trillion? You know how much it works out to for every man, woman, and child? I mean, Americans have no net worth. The average American has nothing. He just has liabilities. He's got debts. How are we going to pay? We can't pay. And all it's going to take is a move up in interest rates. Now, what is going to say that? Because you've been saying, Peter, you've been saying rates are going to move up for a long time, yet here we are at record lows. Well, I didn't put a date on that. But, look, I was saying real estate prices were going to fall for years, and they finally did. So sometimes, you know what's going to happen, you just don't know exactly when. But what I think is going to happen is, right now, Europe is the main focal point of worry. And that's taking the pressure off the dollar, it's taking the pressure off the treasuries. And that's a bad thing, because that means the government can borrow a lot more money. But that doesn't help our economy. The more money the U.S. government borrows, that's bad for our economy. Because that means, A, the U.S. government is getting bigger because it's spending all this extra money, and B, we're on the hook to pay it back. Now, I don't want that. I'd rather the government not be able to borrow any money. But they're borrowing more money and spending it, and that's why the economy is not recovering. I mean, people try to claim that we were recovering from the recession. They claim the recession ended in, I think it was June of 2009. They claim it ended. It started in December of 2010. It didn't end. In fact, I looked at the government, they just came out with statistics that during that Great Recession, that personal income, household income, adjusted for the CPI, which is not really inflation, just a watered down version of it. But even if you adjust for the CPI, household income fell by about 2.5% during that period of time. In the 3 years of the recovery, it's down 7.5%. So how do you have a recovery where the people are doing worse than during the recession? See, I don't think it ever ended. I think they made it up. It's statistics. How do you create a phony recovery? Well, you just underreport your inflation rate, and then you get a GDP number that's too low, because whatever the nominal number is, you have to deflate it by what you think inflation is. But I don't think the economy is anywhere near recovered what was lost in real terms. So we didn't really have a recovery. We're recovering. All we were doing was spending more borrowed money. So there was no recovery, right? We just got sicker. But interest rates stay low. But when the world is no longer as worried about the Eurozone, and that's going to happen. I mean, they're going to put a Band-Aid on the European situation. They're not really going to solve the problem, but they might, satisfy the markets for a while that they're going to solve the problem. And in fact, if you look at where the euro is right now, the euro is still around 137. I mean, despite all the problems that we've had recently, the euro's not going down. I mean, it's going down against gold, but not against the dollar. And if the euro was going to go down against the dollar, it would have gone down already. But it hasn't. And I think that you're going to get a rally in the euro and a rally in a lot of other currencies, particularly if we get some type of temporary Band-Aid on the European sovereign problem. And when that happens, the dollar starts to go down. And prices, commodity prices, will start to move up. If you look at a chart of the oil market, I mean, oil looks very, very strong. It's over $95 a barrel. Oil couldn't sell off during this most recent downturn. In fact, it's risen over 20% in the last month. And if you look at the trailing CPI, even though Ben Bernanke is claiming there is no inflation, even by the government's admission, in the past year, consumer prices are up 3.9%. That's a big number. And of course, the real rate is even larger. But when Nixon imposed wage and price controls, the rate was 4%. That was it. And it was such a national crisis that we needed wage and price control. We're at the same level, yet the Fed claims there's no inflation at all. And we can keep interest rates at 0. So what's going to happen is interest rates are going to, longer rates are going to start to creep up a little bit, but prices are going to be rising. Commodity prices, oil, agriculture, the dollar is falling, and those headline CPI numbers are going to get bigger, even in the rearview mirror. We're going to start to have a 4 and then a 5%, and I think by the time trailing inflation is 5%, the Fed is in a lot of trouble. Because now it's going to be very difficult for the Federal Reserve to pretend that there's no inflation when it's that high. Meanwhile, we're not going to create any jobs. So we're going to have an unemployment rate that's at 9% or maybe higher when the trailing inflation rate is 5%.